Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad, and it's just 25 minutes left, which is to the trading session. But yes, the week has started on a positive note and has definitely turned out to be better and fresh. We did see a policy shifting news which came in since Friday, from RBI's new tightening norms to SEBI's consultation paper on the price bands for gold and silver ETFs. But seems like the market has tried to digest a majority of the news and move ahead despite the weakness that we did see in capital market names. But yes, at the present, you can see Sensex up by about 650 points. It's recovered quite smartly from the day's low levels, and Nifty is also back above that 25,600 mark. So it's above that 25,680 odd levels, up by about 200 points. But the breadth of the market, that remains on the losing end, given that the declines still have an upper hand at this point of time. So yes, what has led to this fall in the market is the capital market stocks. So where the bulk of the headline has been BSC, Grow, Angel One, all of them have been sulking in the trade, given that RBI has tightened the lending norms, which means that the new regulated rules will be on how much banks can be lending to the brokers and trading firms. And which is why we have seen that all of the capital market names, be it your BSC, Grow, Angel One, all of them have taken quite a bit of hit. But yes, the news flow has also been quite negative on the back of some that the funding could be more restrictive and expensive from here on, which is why we could see some earnings impact on majority of these capital market names. But we'll decode later in the segment what this means volume wise and of course from a market liquidity perspective. But yes, apart from the capital market stocks, IT stocks also continue to remain under pressure for about the fourth consecutive day. So shares of Tech Mahindra, Infosys, Wipro, all of them have been trading quite in the negative territory. Apart from IT, it's been auto stocks also which has remained under pressure. If you look at the Nifty Auto Index, it's down for the third consecutive day. And you can see that majority of the auto companies, for instance, your Maruti Suzuki, Eicher Motors, M&M, all of them have been dominating the top Nifty 50 losers list. But aside of that, you can see PSU banking names have been fronting and trying to support the downside for the markets today. Nifty PSU banking index is up by about nearly 1%. Pharma index has also done quite well. Realties have been doing well. Bank Nifty is also up and about by about 1% or so. So yes, all of these counters have been cruising in the trade today. But yes, let's quickly get to the top gainers and losers on the Nifty 50 front of where we stand as of now. You can see that one of the top gainers on the Nifty 50, that includes your Power Grid with about 4.5% gains. We did see that the company has commissioned a project, which is why the stock has done quite well. It snapped its two-day losing streak, 4.5% gains coming in for Power Grid. Coal India has also done well, 3% gains coming in from there. HDFC Bank has been doing quite well, 2.5% gains from there too. Adani Enterprises, Max Health, Axis Bank, all of them are some of the gainers on the Nifty 50. But yes, on the losing end, you can see Tech Mahindra leading the losses with about 1.5% cut. Maruti Suzuki also not doing well with about nearly 190 points decline. Bajaj Finance also with about 1% decline. Eicher Motors also not doing well. Other than that, Bajaj Auto and of course Trent also some of the losers on the Nifty 50 at this point of time. But yes, let's quickly decode what the last minutes of the trade looks like, and of course what the way ahead looks like for the week itself. Let's quickly move on to our technical expert of the show. Joining me is Rajesh Bhosale, who's the senior technical and derivative analyst at Angel One. Rajesh, good afternoon. Nifty has been doing well, Bank Nifty has been doing well, but the breadth of the market, that remains weak. So what can we expect from here on?
Hi, afternoon, and thank you for having me on your show. So definitely a good start for the week for the key indices. If we, in fact, the way we closed last week and the way we started in the morning, Nifty has defended its key support levels, and it's now back above its key short-term moving average. So we sense that somewhere around the bullish gap left after the US India trade deal talks, that gap around 25,300, 25,200 is acting as a support, and the kind of engulfing pattern we are seeing in today's session, we expect Nifty to see further up move in the coming days. So we'll have a buy on dip approach where somewhere around 25 600, 2500 would be the immediate support, and we expect Nifty to rebound towards 25,850 to 26,000 levels. Yeah, the mid caps or the broader markets are not doing that much, but if we see the kind of reversal we are seeing from the intraday lows, some kind of base formation is definitely there. So buy should be positive, but one should keep focus on a space that are showing relative strength. Like it may be banking, it may be finance, or it may be metals, or like a PSU basket. So these three, four space are showing relative strength, and one should focus there for outperformance.
Okay, that's the view for the Bank Nifty and of course the Nifty 50 as well. But yes, Rajesh, capital market stocks clearly the biggest casualty of the day. We've seen shares of BSE grow, all of them grappling in the trade, and this is coming on as a reaction of the RBI's tightening of capital market norms. So, for you, aside from the chart, how much of an impact are you assessing in terms of internally the volumes, and of course, in terms of earnings also? Is there anything that you would lay down for us?
See, as you highlighted in the start, I mean, in the morning there was some weakness there, but from the lower levels, market itself is showing strength. So it indicates that market is digesting that kind of pain in advance, and the kind of market has rebounded. It seems that overall in the near term, I mean, the strength is likely to be there. So our approach remains that there would be opportunities and we'll continue to focus there.
Okay, all right. We'll be watching out for majority of these capital market names. But yes, IT stocks also contributing to the losses. Nifty IT index down for the fourth consecutive day. And we have seen that the big wigs, your Tech Mahindra, Wipro, all of them have been sulking in the trade. Right now, we're seeing a little bit of a comeback. It's right now flat to with a positive bias as of now. It's showing some recovery from the day's low levels. But yes, for you, Rajesh, IT stocks, do you think that the fall has been blown out of proportion, and can we see a comeback from these levels?
See, if we see from the Friday opening levels itself, I mean, Nifty IT basket is showing some resilience from the lower levels. Having said that, on the weekly charts, still the charts seem distorted. If we see double top bearish formation is there, and I mean, major breakdown is still intact. So we'll wait for some kind of clear reversal or some kind of base formation or some clarity from the management of this key IT space. Until we get a clarity, one should avoid this space.
We need to avoid this space for the Nifty IT index. But yes, we did see an exclusive interview that came in from Moneycontrol on the Anthropic's India's managing director, who's been saying that the revenue run rate in India will be doubling since its announcement of its market expansion, which it did in October. So yes, so this is something that we'll be watching out for. And of course, this is the first interview that she has given after taking charge. But yes, let's move on and talk about another stock in focus. That's your Power Grid. It's one of the top Nifty gainers today, and the stock has done relatively well after the company commissioned a double circuit Ramgarh-Badla transmission line. And this is aiming to facilitate the evacuation of power from large solar parks in Jaisalmer and Ramgarh areas to the national grid. Rajesh, today's rise, the stock has snapped its two-day losing streak. What do you make of the sentiment?
So the Feb itself has been amazing for the power grid. If we see, generally power grid is considered as a slow moving stock. But if we see from the Feb lows of around 250, the stock has moved towards the 300 levels. In fact, if we meticulously observe the charts, we can see a SOSA kind of pattern breakout. Last two sessions, definitely there was some profit booking, but it was just to retest the breakout levels. And today, I mean, it has resumed its up move. Overall, if we consider for the next 3 to 4 months, we expect the stock to extend its move. Possibly the stock is poised for move towards 345 to 350. So any kind of dip that we saw in last few sessions, similarly, if we see dip, it should be taken as a buying opportunity, as we have targets of around 340 to 350 in the coming months.
Okay, all right. 340 is the next target for Power Grid then. All right, let's move on and talk about another stock in focus. That's your Ola Electric. The stock is, did fall to its all-time low level, 6.5% decline. That's coming in for the counter. And this came in as a negative reaction to its earnings. Now, number-wise, we did see that the third quarter revenue halved while losses remain elevated. It did report a loss of about 490 crore rupees. And EBITDA loss, while it narrowed annually, but it did increase on a sequential basis. And on the back of this, Emkay Global has downgraded its rating and cut its target price by about 60%. Rajesh, of course, a sharp breakdown on the counter. And can we expect further fall ahead?
During the December month, prices there was a sharp rally from the levels of around 30 to around 45 levels, and since last few days the prices were trading around this support. So the market were expecting some kind of reversal from there, but this support as well has been broken down. So in the near term, we expect further weakness. The stock can slip further towards the levels of around 25 to 26 levels, and on the high side, previous support around 30 31 is likely to act as a resistance. We would suggest instead of Ola, which is likely to remain underperformer, one can better switch to Hero Motor or TVS Motor, which does have some exposure to electric mobility.
Okay, all right. That's the view for Ola Electric. But yes, so, one stock which has been buzzing in the trade today, that's your GMR Airports. Right now, the stock is with about 7% gains after its healthy December quarter performance. Number-wise, it did see a hit to its bottom line, but the top line grew in strong double digits, which was supported by higher passenger traffic and improvement in the operating performance. And on the back of this, Jefferies has shared a buy call on the counter, saying that the company has returned to profitability after several quarters. Rajesh, for you, GMR Airports, do you think the strong breakout that we have seen today is sustainable going ahead?
If you see since last 1 year, every dip towards 200 DMA was getting bought into. Recently as well, it was trading around 200 DMA, and the bounce is precisely from those levels. In fact, if we now observe, we can see a structural high top, higher bottom structure, and prices are now well above short-term moving averages. So we expect yes, this performance can extend. Previous swing high of around 108 can be retested, and once that is crossed, even the levels of around 125 can be expected. So our bias is positive. The bullish kicking pattern that is formed today around 93 levels will act as a immediate support, and 108 first, and then 120 125 would be the next targets.
Okay, all right. 108 is the first initial target that you're watching out for then for GMR Airports. And the stock has been soaring in the trade today. But apart from this particular counter, it's another stock, that's your Natco Pharma. That shares have been skyrocketed today. Right now, it's seeing a gain of about 7%. And we did see that the company received a CDSCO nod for its semaglutide injection earlier. So this approval means that the company can now manufacture and market this weight loss drug for adults. Remember that earlier the company had announced plans to market this product in March this year, which is why the street has been cheering this move. Rajesh, for you, after some bit of an underperformance that the counter has seen, we have seen that the stock has crossed that 900 rupees barrier today. So what lies next?
Yeah, so in the morning, the prices also tested levels of around 930 from the morning highs. Definitely some cool down is there, but overall, the daily chart structure indicates a double bottom kind of price pattern breakout. So in the near term as well, we expect this up to extend. Maintain a positive bias. Those who are having continue to hold on to it. On the downside, 830, 820 seems to be a strong base. First, we expect prices to retest morning high of around 930, then possibly 960 levels. 930, 960 are the first targets, and one that is crossed, possibly the stock can even move to 1050. So structural bottom is there, can hold on to this counter.
All right, hold on to this counter because we have 1050 also on the charts. All right, that's the key takeaway for Natco Pharma. But let's move on and talk about KFin Tech because that stock is gained today on the back of its Q3 performance. Revenue risen by about 28% on a Y-on-Y basis. Profit saw a slight increase annually, and even the operating margins, however, that showed a bit of a compression. But yes, brokerages have remained positive on the counter. Jefferies has given out a buy call and a target price of about 1,300 rupees. Rajesh, given the stock has been wobbly, do you think that there is a turnaround from here sentiment-wise?
Yes, if you highlighted correctly, I mean, since Jan month, the prices have been trading in a range. Not much is happening. It's trading with a range of around 950 to 1050 levels. We'll wait for a clear breakout above 1050. Once 1050 is crossed, which also coincide with a bunch of short-term moving averages. Once the 1050 is crossed, then a potential of around 1200 can also be seen. As of now, those who are holding can hold on to it. It's on a strong support. 950 seems to a strong base, which coincide with the long-term 200 weekly moving average. So hold on to it with a stop loss below 950. But those who want to add fresh, wait for a clear breakout above 1050 for a targets of around 1200 plus levels.
Okay, all right. 1,050 is the next resistance, and 1,200 levels is the further resistance level for K Fintech. All right, let's move on and talk about Torrent Pharma, because that stock has also gained today on the back of its good Q3 performance that was largely in line with the street expectations. Right now, the stock is up by about 4.5%, and we did see Nuvama sharing a buy call on the counter, saying that the company's branded markets have performed well and the growth outlook remains intact. And on the back of this, the Torrent's revenue, EBITDA, and profit has also beaten the consensus estimates for the brokerage firm. Rajesh, what do you think for Torrent Pharma? Of course, the stock has been showing some good signs. Can we expect the trend to remain same, because the Q3 results definitely speak well?
Yeah, so very strong chart structure. I mean, one of the strongest from the pharma space, continuously moving high in a higher top, higher bottom. Every dip towards 50 EMA getting bought into. Last couple of weeks were definitely in a consolidation mode, but that breakout is also there. So we expect further upside possibly towards 4500. So maintain a positive approach for fresh entry. Use dips as an opportunity. 4200 would be the immediate support, and we expect 4500 to 4550 in the near term.
4,500 in the near term can be expected. That's the word. But yes, let's move on and talk about Indus Towers. Right now, the stock is up by about 1.5%. It's definitely recovered from the day's low levels by about nearly, by about 1.5%. And we did see Citi maintaining a buy call on the counter with a target price of 540 rupees per share. Now, despite the stock's 40% rally over the past 6 months, Citi says that it continues to see further upside in Indus Towers, and they've identified 3 key catalysts for the stock over the next 3 months, and which is why they have remained quite bullish on the counter. Rajesh, for you, the stock has been on a steady climb anyway, and in terms of target, what are you watching out for?
So despite of the recent jump, I mean, we expect the outperformance to continue, because if we now see it has broken out about September 2024 high. So after 2 years of strong consolidation, we are seeing a fresh all-time high breakout. So expect this stock to give a strong performance. If positions are held for like a 6 month to 8 month, possibly the stock can move towards the levels of 600. So very bullish on this counter. In fact, any dip can be considered as a buying opportunity. The breakout levels are of around 460 would be the key ideal buying level. And as I highlighted, if positions are held for like 6 months to 8 months, 550 and then 600 can be expected in this counter.
Okay, all right. 500 to 600 can be expected for Indus Towers. All right, let's move on and talk about Inox Wind, because that stock has been down by about 5% today, and it's fallen to about over 2-year low, given that we did see JM Financial downgrading the counter to add from and buy, and even trimming its FY28 EPS estimates. Now, what the brokerage has noted that the company currently has an order book of about 3.2 gigawatts, but given the challenges which is related to grid connectivity, rights of way issues and delays in power purchase agreements, they have revised their execution estimates downwards, and which is why we can see that the stock is seeing a bit of a downbeat sentiment. Rajesh, the stock is now down for the 4th consecutive day. So can we expect the trend to remain negative?
Yeah, I mean, last couple of weeks, not much was happening. And in fact, the lower end of the support as well has been broken down. So, I mean, we are seeing that any bounce towards 20 EMA is getting sold into. So avoid is the counter, and in fact, the stock can slip further towards 90 levels.
Okay, the stock can slip towards 90 odd levels. That's the word for Inox Spin. A little bit of a caution can be observed here for the counter. But yes, let's move on to Manappuram for finance because the stock has been quite volatile today. But right now, the stock is moved back into the green after the company did receive its final approval from RBI for the proposed acquisition of 42% stake and control by Bain Capital. So yes, which is why we are seeing a bit of a recovery in the counter coming in. Rajesh, what's your thoughts? Manappuram Finance going ahead?
So yeah, from the lower levels, we are seeing some positive traction, but we'll wait for some kind of confirmation. If we see somewhere around 310 to 315, I mean, there is multiple resistance. Once that is crossed, we can expect stock to move towards the levels of around 325, 330 levels. So that would be a key level. And on the lower side as well, those who are already having long positions can hold on to it. Today's level low around 295 that coincides with 50 EMA. So for fresh entry, wait, but those who are having can continue to hold with a stop loss of around 295.
Okay, all right. That's the view for Manappuram Finance. But let's move on and talk about Blue Jet because the stock is at 10% lower circuit given that global brokerage firm, that's your JP Morgan, downgraded the counter and cut its target price as well. Now, what they have downgraded is to an underweight call and they have lowered the target price to about 330 rupees per share. And the downgrade has been driven by multiple concerns. First, they are saying that there is a weak execution in the contrast media business. Second, there is a pressure in the PI and API segment, and the growth visibility has also been clouded, and that's the third factor. Rajesh, what's your take? Of course, the stock has anyway been on a negative trajectory. What's the next support levels that we can watch out from here?
So can you, I mean, what's the symbol of the stock?
It's Blue Jet Healthcare.
Today, I mean, the chart structure remains in a downtrend, and today, after a gap down, there is further sell-off. So, I mean, it's a avoid kind of counter. Use any bounce towards 400 to exit position. Possibly, the stock is headed for much lower levels, possibly towards the 300 levels.
Okay, all right. That's the word coming in for Blue Jet. But yes, let's move and talk about another stock in focus. That is your CE Infosystems, MapMy India. The stock has declined today following its Q3 results. The company's consolidated revenue has fallen to about 18% on a year-on-year basis. Total income has declined by about 16% on a year-on-year basis. Rajesh, what's your take for CE Infosystems?
Give me a minute. I mean, this stock as well, if you see from the Jan highs, it was trading around 1700 and now broking below 1200. So this also remains one of the avoid kind of counter. Fresh flag breakdown is there. Possibly the stock can move towards the 1000 level. So I'll suggest exit on any bounce. 1250, 1280 seems to be a strong resistance. Unlikely to rebound above it in the near term.
Okay, all right. That's the word for CE Infosystems. But yes, let's take the last rates which is coming on your screen right now, how the market has settled for right now. Of course, if you look at Sensex has soared by about nearly 600 points. Nifty is also above that 25,680 mark, so to say. So, of course, the Nifty has snapped its two-day losing streak and started this week clearly on a fresh note. But yes, of course, the weakness has been visible in the IT counters. If you look at the Nifty IT index, right now it's, however, flat but with a positive bias. So yes, it's recovered from the day's low levels. But apart from that, you can see majority of the counters and the sectors have recovered from the day's low level. Even for Nifty Auto Index, right now the index has trimmed some bit of its loss, but still it's down by about 0.8%. But other than that, you can see the market breadth. The market breadth has clearly been in favor of the declines so far as of now. But yes, the major knocking has been on the capital market names. You look at BSE, you look at Grow, Angel One, all of these counters have been on the sulking, have been on the downward trajectory today. So yes, we'll be watching out for these names later in the week, whether or not there is a little bit of a recovery and of course a breather. But yes, let's take a quick check of how the gainers and losers look like on the Nifty 50. If you look at the gainers, it's your power grid has been soaring in the trade with about nearly 4.5% gains. Coal India has also done well. HDFC Bank, Adani Enterprises, Max Healthcare has done well. Axis Bank with about 2% gains. Shriram Finance also doing well with about 1.5% gains. But yes, on the flip side, you can see about 16 odd losers on the Nifty 50 companies. Tech Mahindra with about 1.5% cuts. Bajaj Finance also not doing well. Maruti Suzuki, Eicher Motors, M&M, Bajaj Auto. So a lot of auto names have been dominating the Nifty 50 losers list. And IT stocks definitely, it's tried to make an attempt of a recovery today and it has settled flat but with a positive bias. All right, Rajesh, coming to you for, of course, your last picks of the day. What are you liking in the current market?
So two stocks that, in fact, two sector that we are liking is one is banking space and second is public sector space. So from the banking space, we are liking the HDFC Bank, the heavyweight. If we see, since last week it was under pressure, but today there was a strong bullish engulfing pattern, a double bottom kind of structure on the daily chart, a bullish divergence. And if you see this reversal is from the long-term weekly 89 EMA. So we are bullish on the HDFC Bank. We expect a strong bounce back. HDFC Bank can be bought with a stop loss of around 900, and in the near term 975 would be the targets. Along with the banking space, we are bullish on the public sector, especially the power sector, and NTPC is one counter that we are liking a lot. A weekly chart indicates a strong breakout. After 2 days of profit booking, it has rebounded from its bullish breakout levels. Today there is a strong formation. So NTPC can be bought with a stop loss of around 362. In the near term, expecting 396 as a target.
Okay, all right. Those are the stocks that we need to watch out for. But yes, with that, we have to let you go, Rajesh. Thank you so much for your time and joining us. All right, of course, we've seen a late rally, but yes, Nifty has managed to climb above that 25,600 mark and it's breaking that 2-day losing streak and starting this week clearly on a positive note. But yes, the concern for the market has remained, that is your market breadth, which still continues to remain favorable towards the declines. But yes, the biggest casualty of the day has been the capital market names, be it your Angel One, Grow. All of these counters did see a little bit of a sulking in the trade today on the back of these SEBI's, RBI's, tightening of the lending norms, which is why we have seen a little bit of a, we've seen a bit of a knocking on majority of the capital market names. But apart from that, Nifty IT index, which had been sulking throughout the day, did come back on its feet and it snapped its 3-day losing streak to end flat but with a positive bias. So yes, 0.1% gains coming in for the Nifty IT index, and we'll watch out if there is any other sustained recovery from here on which is coming in for the tech names. But yes, to talk more about markets and of course the way ahead, let's quickly move on to our next guest of the show. Joining me is market expert Anshul Saigal to decode what lies ahead for us. Anshul, good afternoon. Plenty of policy shifting news since Friday, and we are seeing capital market stocks being the biggest casualty of the day. With RBI tightening the lending norms, what is the kind of earnings impact are we expecting here?
Good afternoon, Lovisha. Always a pleasure to speak with you. While this is a one-day event, some regulatory issue which impacts stock prices on a one-day basis. But if you think about it from the sectoral perspective, it is an even playing field. So what impacts one player impacts all players. And to that extent, if you look beyond just this one day, it's just going to be business as usual. Whoever is able to give a better offering, grow better, provide opportunities for its clients for the long-term success of their own business, those companies and those stocks are likely to do well. Again, one day impact is what catches everyone's eyes. But in the long term, it is really the business strength which decides direction of a stock. And I don't think that with this regulatory change, there is any impairment of the long-term trend in these businesses' growth path. So, to that extent, I would urge your viewers to look beyond this impact and look at bottom-up opportunities, strong businesses for the long term.
Okay, got it. But Anshul, what does this mean for derivatives market? Because in terms of volumes, it's a direct hit to the proprietary traders because now they need loans which needs to be backed by about 100% collateral and 50% cash. So going ahead, does this mean that we could be seeing a bit of a shrinkage to the liquidity?
That for sure, Lovisha, is likely to happen, and that has been the stated intent of the regulator. That there is a lot of speculation which is hurting the small investor, small speculator. He doesn't realize that this is a proposition in which, in all likelihood, he's going to lose money. And in the hope of quick money, he's speculating a lot of his capital. And to prevent that, it is the stated intent of the regulator that they need to tighten the screws on derivative trading. And I don't think that it is a bad thing. I think that it is in the interest of the larger system that this happens, and the smaller investor doesn't hurt as he has been in the recent past. To that extent, I wouldn't be concerned about this development for the system as a whole.
Okay, got it, got it. But apart from that, there's another news that the RBI has allowed banks to fund M&A, corporate takeovers. So it's a big news in terms of corporate deals, but how are we assessing in terms of corporate lending book of banks? And what does this mean in terms of positives, key risks one needs to watch out going ahead?
Yes, this is definitely a positive. Banks were earlier not funding acquisitions, and to acquire, companies were going to either investment banks or funds to fund them, and or alternate sources of capital to fund them for these acquisitions. Now, with this ruling, for companies over 500 crore net worth and a history of profitable growth, acquisitions become a viable proposition because funding will be made available. To that extent, this should actually spur activity, M&A activity in the country, and a lot of companies who would have interest in M&A but were holding themselves back for want of funding will now not have that as a concern. So I think it is a very welcome.
Okay, got it, got it, got it. Anshul, we've had a series of policy shifting news over the weekend also. I mean, despite global cues remain a little quiet, in another development, we did see SEBI inviting some comments in its consultation paper to introduce price bands in gold and silver ETFs. And we did see the fall which took place in gold and silver ETFs today too. How are you viewing this move? Because it at least aims to bring some stability, reduce the excess. So do you believe that from here on we can see some moderation in gold and silver prices?
Lovisha, one data point that I heard from someone which really surprised me was that silver MTF book is the largest of any stock MTF book. So that tells you what kind of leverage, what kind of speculation was happening in these commodities. Of course, the fundamental case for these commodities was strong, but every fundamental case is strong at a price. When the price enters speculative territory, that's the time. And when everybody is kind of talking about a trade, is saying that this is a short trade, that's the time to actually stay away from such trades, to be extra cautious. But human nature actually pulls us to what everybody else is doing. And especially if that trade has made money in recent times, it just seems like that trend line of making money in recent times will continue in the future. But more times than not, when speculation is at its peak, that's the time to stay away. And it was no different in these commodities, the precious metals. As we have seen, silver from peak has fallen in pretty quick time. In 1 week, probably the commodity was down about 40%, and that again is a signal for sensible investors to actually stay away when things are heated up, when everybody is talking of a trade.
Okay, got it. Do you mean, does this mean that, we could see some moderation in terms of flows also? Because, of course, we've seen that the AMFI data had pointed out that we've seen record gold ETF flows. Are you expecting a moderation down there as well?
See, gold is not as volatile as silver. I wouldn't say that there will be. I mean, I'm no one to make that comment. I don't track that space as closely. But just from my experience in the markets, I can tell you that when the upward trend or the balloon gets burst, that's for new investors to come in and put large sums of money becomes that much more difficult in such a scenario. And my guess is that it will be no different for commodities as well. For now, that halo around commodities, that these commodities will only go up because of XYZ reasons that even my rickshaw puller was talking about. I think that when such a scenario happens, generally capital flows also ebb. They don't come in the same gush that they have in recent times.
Okay, got it, got it. But in terms of FII flows, what are we watching out here? Coming back to equities, we have seen that the valuations have taken a reset. Finally, there is some hope of earnings revival given how the Q3 earnings have panned out. I mean, do you think that that's enough for the FIs to make a comeback, or does the India's anti-AI play make them still unconvinced?
If you look at the Max 7 in US, Lovisha, you will notice that for the current calendar year, the Max 7 has given strong results, yet the stocks are down. And they're down somewhere in the region of 15 to 20%. Now, that is not a good sign. Every asset class as I mentioned earlier, is valuable at a price. When that asset class, the price of that asset class surpasses its fair value, at those prices, even the most pristine asset is not good because you will probably lose money or not make money for the long term. I think the AI trade was seeing some of that trend play out. And as a result, we've seen a correction in that trend for the moment. I think that India's anti-AI trade positioning is probably going to work for India going forward. Not that we are not doing anything in AI. Now the conference that we're going to have in Delhi between 17th and 19th is going to be quite a remarkable conference. Some world leaders are here. AI leaders are here, and there is a lot that will be unveiled in this conference. What I hear is our own LLM model will be unveiled in the conference. And bear in mind, for Sindoor, the Operation Sindoor, while a lot of the details are not out, but it was a huge success of our indigenous AI offering. We actually managed the sort of combat activities through our indigenous AI, and that worked very well on the ground. So it's not like India is not doing anything in AI, but given the expanse of this market, there are a lot of opportunities outside of AI. And as you rightly mentioned, valuations have become reasonable. Time has passed. FIIs as a whole are at multi-year lows of India holdings. These all bode well for FIIs to come in and buy into India.
Okay, got it. But Anshul, I mean, of course, we are late to the AI party here. But does this mean that, India in the long run will see a transition in terms of their services-based model to a solution-based model?
It looks very, I mean, I should say that it is in the interest of our services industry to actually see itself in that light. That it isn't just human arbitrage, human cost arbitrage that they should be focusing on. They should be focusing on providing solutions and value-added solutions. and using AI as a tremendous tool that is available to them. If you and I are speaking about it here, I'm sure that they are speaking about it in boardrooms and management meetings, and something must be in the works, even if it is not evident at the moment. Regarding your point that India is late to the party, I think this is still early days and AI has a long runway from here to the next, say, 50, 100 years. And, we still haven't really lost this race. We can really pull up our socks and come back to the party. I am quite confident that we will do that in the times ahead.
Okay, okay, got it. But Anshul, I mean, we've seen the quite a bit of a meltdown which came to the Indian IT sector. I mean, how would you suggest investors to approach it? I mean, is it a good time for them to accumulate at the current levels?
Um, See, there is uncertainty on how they will deal with the AI issue that plagues them because a lot of their operations can be automated through AI, and they won't need the existing workforce to execute their operations. They clearly the It's not like the proposition that they offer has become obsolete. The proposition, in my judgment, still remains because it's not like the financial sector in US will use in-house AI abilities to program and to give software solutions to themselves. They will always rely on third parties to do that. Of course, the third parties will have to use AI to provide these solutions and to lower its own costs, which to an extent I think is a transition phase. I think that Indian IT is will be well advised to do this transition, and I'm sure that they are working on it as we speak. To the extent that one should invest in these names, valuations are absolutely not as expensive as they were till recent times. But this is not just about valuations. One will have to see the dust settle before one goes in and invests here. I don't think that at this time these the IT names will offer tremendous upside opportunities because the headwinds are very real. But in due time, once clarity emerges on what they're doing with AI, I think at these valuations they may become interesting.
Okay, okay, got it. But we've seen Q3 earnings coming to an end. Anshul, what are your hits and misses, and what are you seeing in terms of growth trends for Q4 and onwards?
Lovisha, it's quite evident that this quarterly earnings season has been not disappointing. It has been, I would say, more satisfactory than not. On the small cap space, so far, if I remember right, of the results that have been declared, earnings growth has been somewhere of the region of 32%. Of course, last year was a low base. On that low base, it's about 32%. In the mid cap space, it's been about 15 to 16%. And in the large cap space, it's been about 8 to 10%. Overall, that's not something that would disappoint the markets because it's been in line to better than what the markets were expecting. Um, and generally, when one speaks with the managements, of course, numbers are a very important construct. But when you speak with managements, you get a sense of their body language and how confident they're feeling. I have been meeting over the last week, last 2 weeks, a lot of companies, and the sense one is getting is that Indian economy is actually doing quite well. If you speak with the cement companies, they'll tell you that we are in a stock out situation. If you speak with CV companies and look at their numbers, in fact, even if the first quarter numbers, CV numbers you look at, we were somewhere close to 30% growth, and CV companies don't buy unless they are sure that from the first month itself, commercial vehicles will start making money for them. So CV cycle seems to be on a positive trajectory. Small and mid cap individual sectors and companies, what one is hearing from them and the body language one is seeing is quite robust. So I would be, after this correction that we have seen over the last 16 to 18 months, I would be more positive than not.
Okay, okay, all right, got it. Anshul, any sectors you want to highlight here that you're positive or even underweight on?
Autos look quite robust. I think that metals, some of the metals move has happened in particularly in non-ferrous metals. Ferrous is yet to happen. I think that that space one should have a lookout on for the long term. If you look at capital goods, many companies which were trading at substantially higher valuations have corrected quite meaningfully. That looks quite interesting. Pharma, certain companies in pharma and pharma distribution, those look quite interesting. I think there is, we've seen the rally in metals, that is in commodities, but we've not seen oil do anything. Oil has been quite weak. And this is at a time when India is gunning, that is, the Indian government is gunning for oil sustainability. In case we stop getting oil from third parties, we should have enough availability of oil internally. What that bodes for the Indian oil sector is a long runway of growth. I think oil is a space to look at as we speak. Both the upstream commodity as also downstream players, even equipment suppliers, etc. Those will become very interesting. So a whole host of sectors, even consumer durables, consumption, I think, is something that is likely to see tailwinds, and as we move ahead into this year. And consumer durable companies, some of them have corrected over multiple years, this is a time and price correction. So value has emerged there as well. A multitude of opportunities in sectors available in this country.
Okay, got it, got it. All right, on that note, we have to let you go, Anshul, but thank you so much for your time and joining us.
Thank you, Lovisha. It's always my pleasure.
All right, that's all we have for this edition of Closing Bell. But yeah, definitely the markets have snapped its two-day losing streak, and it's back above that 25,600 mark. And we'll watch out whether or not Nifty has more legs for continuing its rally throughout this week itself. But for now, it's a wrap from me. Thank you for watching, and do stay tuned to Money Control.